In a previous video, I mentioned that I always try to have two biases in the market when I'm doing my analysis, when I'm approaching the market. I know for some people, they will ask, why would you want to have two biases in the market? There is something called confirmation bias. It's actually a theory. I think you can actually Google confirmation bias and what it does. Basically, this theory says that we usually have notions or biases already present in our minds, and what we actually just do is to actually just look around for things to confirm those biases, and it happens in the markets as well. People go into the market with a feeling, that the market is going to buy, or with a feeling that the market is going to sell. And what are they going to do? They are only going to concentrate their minds on the market selling or on the market buying. And they close their mind, they close their eyes to the market potentially doing something else. That's the danger of what's called confirmation bias. So you find that maybe you wake up with the feeling that Euro USD is going to buy today. You find that when you go into your charts, if you are not careful, everything that you are going to be looking for in the charts is a sign. All that you want in the charts is a sign to show you that Euro USD is buying. Even sometimes when the signs are there that it's actually going to sell, but because what of confirmation bias, you are set on what, looking for buy trades. So it's something that we all have to battle with and have to conquer. It's not just in trading, even in life. We do have feelings, we do have biases, we do have a whole lot of things happening. But when it's concerning money, when there is money on the line, then I think then you need to actively act against it. And how do we compensate for our confirmation biases, these biases that we usually have? Like I said, I always enter the market with two biases. It's something that I learned from years of getting my hands bent, is to always enter the markets with two biases. Understand that the market will do what the market will do. What you can do is, sorry about that, somebody is calling me. So I was saying, what you want to do is to just enter the market with two biases, and not be set on one direction, on like 100% confident on one direction. What you want to do is to actually actively look at the other side. Look at the other side when you enter the market. Of course, your feeling is that it's probably going to buy, but what if? So you also want to look at the other side of the trade, and this is not going to happen like naturally. Like naturally, you're just going to. It's something that you actually have to work on. I've been actually working on it myself. Uh, so I always try now to enter the market with what, two ideas. I look for whatever feeling that I have that it's going to do this, but I also actually actively look for the opposing side, for the opposing idea. so that when things don't go according to my analysis, I am not surprised. I am not surprised. And when I enter the market, I am not betting my house on one direction. That's the problem with having confirmation bias. When you just wake up and you have a feeling that British pound versus dollar is just going to buy, so let me just go in there and start buying. That's how people lose money. So I thought let me just touch on that confirmation bias and how it potentially affects you as a trader. If you learned one or two things in this video, please consider subscribing so that you do not miss future videos. Like this video, leave your thoughts or your comments in the comment section below. Uh, again, if you're looking for Forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those blogs and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. Their link is in the description box below. Until next time, bye.